Hey, everybody, how you doing? Just making adjustments this morning. How's it going? Welcome to Stock Markets with Bruce. It's Uncle Bruce here, and it's April the 28th. It's Wednesday, hump day. Welcome one, welcome all. Nice to see you this morning. I've been following a lot of developments this morning in the markets, trying to keep you posted on what's going on. All kinds of stuff going on, and digging up info and trying to keep you up on what's happening. Nice to see you, everybody. Welcome to the show from around the world. I know you are watching me from everywhere. Let me know where you're watching me from. What city and country are you folks catching me live on today? Love to hear from you. It's fantastic that a bunch of you are already here talking to each other and keeping up on what's going on, and just the whole thing. Thank you, everybody, for all of your kind words, messages, and everything else. Lots going on. Trying to stay up on the latest news. The futures at this point for the Dow, with an hour to go before we open, are down 71 points. S&P is just showing a 1-point gain, and NASDAQ showing a 20-point drop at this point in the morning. Lots could change between now and the opening, but that's kind of the indication at the moment. We're looking at crude up 55 cents a barrel to $63.49. There have been, of course, a bunch of economic results have come out. Earnings have come out for some of the companies that we've been following, and more are expected. Today is a big day for earnings because Apple will release their financial results after the bell today, and we're all waiting for that one. The expectation is a major bump in earnings and cash flow and everything else for Apple, just major. And if it matches anything like we heard from Alphabet, Google last night, expect an unbelievable positive number for Apple. Microsoft, they also released their financials last night. They showed much higher numbers, net profit, gross sales, but their forecasting going forward was disappointing, I guess, as the street was sort of saying. The street, Wall Street, was not happy with Microsoft's probably realistic, expectations of what they were going to do going forward, and they punished the stock. It's unbelievable to me, but it does happen that, like last quarter when Apple had their results come out, their stock went down in value as well. The stock was priced to perfection. To be fair to Microsoft and its shareholders, it has had one heck of a nice run in the last few months. Microsoft shares, just to take a quick peek here on my phone, relate this to you. Where are we here? Microsoft, here we go. Closed at 261.97 last night. And in the last 3 months, you can see here just by this, by my crude holding of a phone in front of your screen, you can just see how the shares were in this range here, down to this level here, which was early March. They were sitting around 227, 261. They went up almost $40 a share since early March. All right, this is the end of April, so in 7 weeks, $40 from 220. That's just about a 20% gain in the stock. Do you think maybe it's priced to perfection at $261 a share? I think so. The high trade so far was 263. At the moment on the pre-market, I know last night they were down as much as about, $9 a share at one point. They were sitting there right now at 255.50, down 647. I think they were down as much as about $250. They're now 255. This is hardly a disappointment for shareholders of Microsoft, down 2.4% at this moment. And I think that the next several quarters for Microsoft will be just as juicy as the one they just had. The PE ratio was at 39 times earnings. This is likely to be dropped lower. Because again, numbers are rising and bottom line numbers are surging, and I think their stock will go higher. The analysts who are covering it, some of them have started upgrading Microsoft. This morning, I heard and noticed that Wedbush has increased its target price on Microsoft to $310 from $300. Stock at $255. You can see what they're thinking. Over at Mizzou, they've upped their target to $285 a share. That's $30 higher than where it's trading right now, up from 270. And JP Morgan is saying 270, which is $15 higher than where we're at, from 245. So the three of the analysts have already come out and have upgraded Microsoft and raised their target prices for Microsoft. And do not be surprised as the day goes on that you're going to see more of this come out from analysts who are going to just say, forget what the stock did last night in the aftermarket. The bottom line here is that this company is firing on all cylinders, and it's likely to go much higher than where it's going up now. Just noticed a little headline: Norwegian Oceania cruises to resume sailing to Scandinavia, Western Europe, starting in August. They're hoping for August, and they're waiting for feedback from the CDC before they know what to do regarding July and in the USA. But so far, the CDC has not responded to Norwegian's request to allow them to start sailing again. I don't know if that's going to happen at all. Other news: we heard last night from Alphabet, or Google, and Google also came out with phenomenal numbers, just phenomenal. They've had a huge growth in profit. The Alphabet shares, let me take a look here right now. They're showing 24.26 on the pre-market. They closed last night on the New York Stock Exchange at, or on NASDAQ, excuse me, at 23.07. So from 23.07 to 24.26 on Google, the $118 run up from yesterday. This was instantaneous last night after the results came out. YouTube making them all kinds of money. Their search engines are making them all kinds of money. They had a dramatic increase in the revenues, gross on the top line and the bottom line. So the stock is at new highs. There is no talk of a split. Nothing is being mentioned. They're going to keep this thing at 24.25 or higher. Whatever the thinking is with these large corporations, why they keep their shares at such high prices, I really don't know. It just is a trend these days. Makes it very difficult for small investors to be able to get into the options market, to be able to write contracts. And I don't know. I don't know what Alphabet's thinking is. Obviously, it's not a key thing for them to have higher numbers of shares outstanding or to have more options trading going on. There are 324 million shares outstanding of Google, which again I find amazing that 324 million shares outstanding. But the market cap $1.5 trillion with the stock trading at such a high price per share. Rather amazing. On the back to the Apple front for a minute, 134.38 down a penny on the pre-market. Everyone is waiting, of course, with great anticipation of this news. The shares outstanding on Apple, 16.7 or 16.8 billion shares. So 380 million shares versus 16 billion shares. I mean, if Google were to do a 10-for-1 split, they would go to 3-something billion shares outstanding. That still would only be 1/5 of the Apple number. But Apple is market capped at $226 trillion. Every time that Apple stock goes up $1 in value, all the shareholders of Apple combined are $16.8 billion richer for every dollar Apple goes up. Just think about that. Oh man, that is something. I love those kind of stats. And keep in mind that Apple, even though they have that many shares outstanding, they've been doing buybacks. They keep doing share buybacks. And they usually pick up 2.5 million shares a day on the open market, which keeps good liquidity, good bid action on the stock. It just shows investors, hey folks, we got your back. You own Apple shares, you own shares in our company. We got your back. Don't worry about that. Alpha raised now to $3,000 target price from $2,500 by Mones Crespi Hart. Another analyst has upped the price on Alphabet to $3,000 a share. I did also notice that Mizzou has upped their target to $2,800 from $2,600 on Alphabet. Deutsche Bank $3,050 from $2,600. Oppenheimer $2,510 from $2,350, and JP Morgan $2,875 from 25.75. So the analysts left, right, and center are all upping their target prices on Google Alphabet because of their strong performance. Quite stunning and quite amazing. And as I say, the stock now is 24.25, and these target prices are 2,800, 2,500, 3,000, 2,800. These are $500 upgrades on Google from here, 20% more, and the stock is already up $100 a share. So that's quite dramatic, and showing you the power of these large companies who are really generating some massive amounts of capital right now. They are generating massive money, and there just is no stopping it. I think for Apple, we're going to have a massive gain here, a big number today. But will it translate into a higher stock price immediately over the long haul? My hunch is it'll go higher because the shares are not right now at record highs. Apple shares are not trading at all-time record highs like they were the last quarter when they came out. They were in that 149, 154 range, and the shares went down. I think 145 was a high. 145 was a high, and they went down to the 116 level in a few weeks or something like that. This time around, I think we may see Apple actually go higher on the aftermarket. I don't really sense that the stock is overvalued, overpriced, and vulnerable to a massive downward correction. We'll see. Anyway, 134.38 on Apple. Now, on GameStop, just reading here a few moments ago, some interesting information about GameStop. It's trading at 174.26 on the pre-market. We're on a volume of 26,000 shares, very quiet. But I did notice something kind of interesting. I just did a Google search, just for the heck of it. I would like to know, I was actually trying to find out how many shareholders are there for GameStop. I mean, how many actual shareholders, how many people own GameStop shares? That's the number I'm trying to figure out. If any of you out there can find a way to give me that information, do some digging for me. Let me know how many shareholders actually own GameStop. What I did find actually was how many shareholders, the SEC says, file 13D filings. These are institutional filings that have to be done by all institutional. 512 institutional holders of GameStop. Just think about that. 512. That means pension funds, mutual funds, ETFs, index funds, hedge funds, and large investors with 5% or more have to all file. We're talking about 90,770,000 shares that are held, registered with the SEC. That's how many shares we have. That does not include you guys. That's what I'm trying to figure out. How many of you out there hold the stock? I know that on this channel, almost all of you who watch me hold GameStop. I mean, you've been in it, or you've been in it, or you're getting in it from time to time, but you're all following it. And many of you who aren't watching me live obviously own it. But there are 512 institutions that own GameStop shares, and 90,770,000 are represented in that number. So do retail investors hold 50 million shares? That means there's 140 million out there. Do retail investors hold 100 million shares? So that means 190 million are out there. You see what I'm getting at? I'm just trying to find out how many shareholders there are. I don't know how to get that info. If anybody knows or anybody can figure it out, please let me know. That would be a real bit of interesting information I would love to get my hands on, and I'd love to share with you, because this just confirms to me and maybe to many the rest of you just how oversold this stock is and how short this stock really is in just the stock side of things. Forget about the fact that there are a number of options out there that are naked call options written. I'm sure that is another 50 to 100 million shares more if you did all the calculations. That would be absolutely stunning, that number. But Jake, do we have 150 million in retail hands? Maybe Jake is onto something. I don't know. I'm really be curious to know how many shares are out there in the hands of retail investors. How many shares are held or how many shareholders there are. Because if we figured out that there were, I don't know, 1 million people held shares of GameStop, or 100,000 held shares, or 50,000, whatever the number is, we can then try to extrapolate some kind of an average amount per retail investor. I have no idea. With these platform trading accounts, platform trading systems where you can buy and sell on your phone, you got to figure that there are tons of people who hold less than 5 shares each, 10 shares each, because you can buy obviously $100 worth of GameStop anytime you want. You put $50 into GameStop anytime you want, any amount, right? Gotta wonder, geez, is it over 5 million people that hold GameStop right now? Is it 10 million people that actually own a fractional share or a complete share and more of GameStop, but are not institutional investors? Does that represent 100 million possible shares floating around in the retail environment, plus the 90 million held by the institutions over here? Yeah. And then, of course, there's the declared short positions, which I think are 11 million right now officially, last I saw, 11.1 million. And then there's the failure to deliver stock out there. Who knows? Because remember, 512 institutional investors had to declare their holdings of GameStop because they're long, they own it. But what's not in this 13D filing, and you're not going to find it in any filing anywhere, period, is how many are actually institutions. How many institutions are short GameStop, and how many does that represent? No one knows, because they don't have to tell us. There's no SEC rule saying you must disclose how many shares you're short, no matter how few they are, no matter how many they are. We do not know, and we cannot find out through any SEC filing exactly how many shares have been shorted, or how many, let's put it this way, how many shares are being carried short by institutional investors and any other investors, period. I mean, just retail investors. There are retail investors short GameStop too. How many are there? How many shares are we talking about? Are we talking about the official 11 million that the New York Stock Exchange says there is? Or is that number substantially higher than that? And is it because there are people who have shorted the stock because they're long contracts that are in the money and they're going to exercise, and that's how they feel they're going to deliver out? Somewhere there's a bunch of stock out there that doesn't exist. And we already know, how can there be 90 million in institutions' hands if there's only 70 million in existence? That's a $20 million difference, 20 million share difference, not dollars, 20 million share difference between 70 million and 90 million, when the New York Stock Exchange said there's only 11 million shorted. So if you take 11 million short plus 70 million outstanding, that's 81 million. Why is this number 90 million? And then where are all the retail investors? If they own 100 million, then we're short 109, 110 million shares. Get the math? 110 million shares short on GameStop, and it's at 174.80. Something's got to give, and sooner or later it's got to give. And this is why I keep coming back to this little tiny comment I make from time to time, where I tell all of you out there, if you share this information with your friends on Reddit, if any of you are posting on Wall Street Bets, and you're posting on GameStop subreddit sites, or wherever you're hanging out talking about GameStop, casual mention just the fact that it appears that there could be over 200 million shares really floating around out there. And if the followers of Wall Street Bets and others just tried to buy 10 shares each of GameStop, a measly investment of $1,700. I mean, at 10 times 174, under $2,000 each, on average, 10 or 20 million of you try to buy 10 shares each. This stock is a $2,500 stock, because there is no way there's enough power and enough money willing to be risked to bet against this stock with that kind of leverage coming in on the buy side. The hedgies out there will just panic to the nth degree to buy their stock back. Anyway, what can I tell you? Did see a couple of positive stories on GameStop in the last 24 hours, and I'm very happy to report that the reports coming out, some of these comments coming out, are very positive in that they're talking about, here we go, Fidelity alone said 10 million new GameStop customers. That's interesting. Sasha, thank you for that. Love your picture, by the way. Oh, you look great. Fantastic. Thank you very much, Sasha, and all of you out there for letting me know. The reports coming out right now, some of these articles on blogs and elsewhere are really positive, and they're saying, these guys just raised $551 million. It's the first time they've ever sold stock from their treasury since the pandemic broke out over a year ago. They've not sold any stock, and when they did sell stock, they sold it at 155 to raise $551 million. They have now over $900 million in the bank. A company with $900 million in cash that was rumored to be going bankrupt is a whole different company. I don't care if you like GameStop or not. If you got $900 million cash in your bank account, you've just changed the dynamic of the future of the corporation. And the latest analyst reports that I've seen and commentary from analysts on GameStop, they were all expecting the company to lose money in the first quarter of this year and for the year as a whole coming up. I can tell you that from what I can see right now, just paying off this $217 million loan that they had, which is paid out officially day after tomorrow, so that'll be on Friday. That'll be gone. That's a 10% loan at $217 million. That was $21,700,000 a year in interest. They don't pay anymore. That means that $21.7 million can be booked going forward as not charges against the company, but savings. That's a cost reduction. That's a $21 million a year cost reduction that the company has just instantly put together. They already had the money before they did this $551 million stock offering. They already had the money in the bank. Now they've just officially used it to pay it out, and they've added $551 million to the pot. So they now have over $900 million in cash, no debt to speak of, and they've just reduced their cost by $21 million additional dollars per year for as long as that loan was in effect. That's pretty good. I think that's very good, actually. Well, I don't think it's pretty good. I think it's very good. That represents about 30 cents a share in lower costs. You take 70 million shares, $21 million in cost. That's 33 cents a share less in cost, or 33 cents in potential additional profits for the company per year. Think about it in another way. If the stock was going to trade at the same multiple that Amazon trades at, which I think is 80 times 33 cents a share, PE multiple of 80 times 33 cents a share earnings, just on the savings of interest charges. That's $25 a share, ballpark. I'm just using a very rough number, maybe $26 a share. Book price on the market, just this one move. Whatever else the company does is additional, whatever other money it makes from its operations is additional to that. There are analysts out there who are saying the stock is a $10 stock. They're calling it a $29 stock, a $30 stock to be generous. That's all the analysts are saying out there. $30 stock at best for GameStop. This one move is a $25 to $26, maybe $27 per share market valuation by just paying off the $217 million in cash. Now you add the fact that they have over $900 million in cash on hand, and they are making money. And the question is, how much money are they going to make for the year? If they end up making $70 million in profit, which is about $1 a share. I'm just playing with round numbers here. I'm not saying these are the numbers. I'm just giving you some ideas. So if they do generate $70 million in actual profit, $1 a share, and they trade at 80 times earnings, that's an $80 stock plus the 33 cent earnings boost by paying off this debt. That could bump them to 133 again. That takes it to $105 a share. That's like the basic PE multiple trading range of the company. But e-commerce companies don't trade at those kinds of numbers. They trade at much higher multiples because their upside is limitless with regards to how much product can they run through warehouses around the world rather than through retail stores. And so you got to go, well, okay, if the potential of GameStop is a much faster growth curve than they've had in the past, and it could go much, much higher. And they've reduced their costs all over the place. I mean, they've, as we know, every time they close stores, they reduce their costs of being in business. Their underperforming stores are gone automatically, and then from there they keep coming back. The cost to run out of warehouses is cheaper, so their margins are higher. That means the PE multiple will be higher for this company, because they're not going to trade at the same PE multiple as a $1.6 trillion monster company. They're going to trade on a PE multiple much higher than a $1.6 trillion monster company, because they can grow, triple, quadruple their earnings every year for the next 5 or 10 years, every single year. So they can compound their performance. Okay, what does that mean? Are they going to trade at 150 times earnings, like maybe double Amazon, or 200 times earnings? Your guess is as good as mine. But if it's 150 times earnings, and they can generate 140 million a year in profit, that's $2 a share roughly. That's a $300 stock. That's just like basic. And if the year after they think they can generate from $2 a share to $4 a share, and then from $4 a share to say $7 or $8 a share, the year out, you look at a company that could be trading at $8 a share forward earnings. You're not going to be trading at 40, 50 times earnings today. No way. You're going to be trading at hundreds of times earnings today, because people are buying the forward earnings. And that's what they did for Amazon for decades. And they're still paying that now for Tesla and for other companies that are on a real growth curve. So if the street continues to come around with the opinion that, gee, this GameStop with $900 million cash, no debt, reduced operating costs left, right, and center, this little company could maybe they can make $5 a share profit next year. If they can generate $5 a share profit next year, and they trade at 200 times earnings, that's $1,000 a share. If they trade at 100 times earnings, that's $500 a share. They trade at 80 times multiple, which is equal only to Amazon. That's $400 a share. Or is that $200 a share? Yeah, 80 times 5 is $400 a share. Excuse me, it's 400. Your stock is 174.52. That's where you're at right now. And the company is reducing its costs dramatically, and they are boosting their margins. Wall Street hasn't yet gone that far with the projections of this company. They haven't gone that far yet. That is where I think they're going, though. And the new CEO will be, I hope, cross my fingers, the one to deliver this message and sell it. Cohen will be the one to also reaffirm and sell that message starting June the 9th, when he's chairman of the board. And so the countdown is on. We're April the 28th. 2 days to go in this month, 31 in May. It's 33 days plus 9. 42 days from now, it's all different. Cohen is the chairman of the board. CEO should be well installed already. We're waiting for that at any time. And I don't think these shares are going to be around here. I just don't think so. We're going to get the first quarter financials released as well. And I'm quite looking forward to those and excited about their projections going forward, because we have not heard them yet. We have not heard projections. That's another thing to look for. And that then changes the narrative with respect to, what are the bloggers going to say in a month from now about this company, in 6 weeks from now about the future of this company? And are they going to talk about the fact that, well, this company should at least trade at the same price that Chewy trades at on a comparable basis? Well, that puts your stock at 450, kids. You're at 174. That puts you at 450 a share if you equal right now Chewy, just equal Chewy right now. But if you show a growth curve, an opportunity to the investors of a much higher price, oh my gosh, we are into some real fun here. Ivan Prunier, thank you for this donation, €5. I think some estimations have been done with polls and complicated math on Superstonk, and give 27-35 million just for this sub. Superstonk comments. How many followers are following? How many people are following Superstonk? 27 to 35 million follow that link. Wow. If those investors there each tried to buy 5 shares of GameStop each, that's 175 million potential buying power into the stock. That's what is that? $800 each. I mean, we're not talking about this stock does not need thousands of people, tens of thousands, hundreds of thousands of people to each buy 10,000 shares to move this market. With only 70 million in existence officially, 90 million held by institutions, 100 million held by small investors. There's already 200 million out there. Another 40, 50, 60 million shares of interest, buying interest coming into this stock. It's all over. There's just no way that these shares are under 300 a share. There's just no way. I tell you, I don't know. We'll see what's going on here. Folks, we're watching it all. We'll see what's going on.